let's get right into it. So here, all we're gonna do is typically when I look to take an entry on any position, I always have to go back in time frames to kind of readjust, but overall I'm spending most of my time on the 15, 5 minute and 1 minute. Reason to that is because when the 1 minute ends, when the 1 minute candlestick ends, 5 of those equals a 5 minute. So I get a better understanding on the 1 minute to how price is wanting to move overall, of course. But the 5 minute and the 15 minute takes away the noise at times, right? Typically the 1 minute, this could look very much a lot of wicks, a lot of buys and sells, a lot of potential trades, when in reality, all it is just grabs, meaning grabs of buyers, grabs of sellers to then take price in a particular direction, right? So there's one thing I've learned about trading is that there's no such thing as a perfect entry. There's the most ideal and best entry, but you'll never catch that perfect entry, right? And typically a perfect entry is just the best place that has a good stop loss and a good reward, right? And if you're able to catch that at the best particular time, then you can have the best entry. So kind of looking at gold here, that's the pair I trade most. I kind of just went back in time here to kind of analyze and show you what the best entry would look like. At this particular moment, gold did sell off, right? And it's a bit different. It's a little different when you're live trading, right? You want to enter the best possible trade when you're live trading, and I'm going to show you that in a couple of weeks, show you the video of me live trading actually gold and showing you kind of my overall thought process, how I look at things. But here, just to give you the best game possible, I'm gonna show you my thought process on how to catch the best entry, right? So overall, still looking at the higher time frame of things, right? One thing I like to overall just do is kind of map it out. So I would start right here, right? Price was moving upward, and basically what happened was price then gave us this range, this consolidation, this accumulation of buyers and sellers, and decided to turn around. And this was the higher low, right? Higher low is a concept we've already discussed in another video. It's just overall trend, right? So price pushed up, pulled back, pushed up, tested this high, right? Failed to take it out, and then continued moving higher, right? So then in this case, this would be a higher low, and this would also be the overall higher low, right? So with this being said, right now we want to be a buyer, right? But we notice that on the smaller time frame of things, we see price pushing down, pulling back, right? Targeting this low, it pushed down again, right? So it took out this low, pulled back, and then sold off tremendously, pulled back once again, right? So now we have lower lows, lower highs. Now the next thing we're targeting is this lower low, right? So with that being said, right now that price is moving lower in this particular time frame. We want to see how to catch the best entry, right? So with this being said, I'm gonna just kind of take off these annotations here to clear out my chart. And I typically don't like to sell when it's a buyer's market, right? I trade the New York session, so typically I'm waiting for a trade. 4, 5 a.m. would be when I'm entering the charts, and by 5 to 6 I'm hoping to take a trade and be out by then, right? So it's still very early here. You can see that the New York session already happened. Price pushed up, right? Consolidated within this range, and let's just let some bars go by, right? So now we're seeing still this range. Price isn't really doing much, not trading just yet, right? Still not yet, still within the same day, just later in within that session. And we're just watching price, right? We're just watching price as the day goes by. You can see that price is still ranging. We have this nice downtrend. In order for me to want to continue to be a buyer right now and to match the higher time frame, I'd want to see price go above this. If price doesn't go above this and fails, we can take out this low and look to target low. Very simple stuff here. Don't overcomplicate it, right? So price is still within this range, hasn't done much, and I'm still in the 15-minute time frame. I'm still not looking for a particular entry. Now this interests me. Price ranged, broke below. Currently this is the Asian session, right? So during the Asian session, price can also move. Price has a tendency to move very well during every session, whether it be the Tokyo, the London, or the New York. All great sessions that price likes to make a move on. So overall, right now we're entering the Tokyo session. I call it the Asian session. It's just something that's been caught on. But with that being said, let's see what happens here. We can note that, all right, price sold off, tested this range, right? And now we move into the smaller time frame of things here, because now we may want to take a trade. Right? We can see, okay, price gave us this range, pushed above, right? Now we see sellers are dominating, right? Sold off beginning of the Tokyo session, pulled back, failed to move lower. With this being said, we do have all these wicks from above, right? And if you were to put a stop loss above here, it'd be about 34 pips. Now this is what I call a decent entry. The reason I say that is because if we go to the 1 minute time frame here, we can know, okay, price failed to move higher, right? Buyers came in, sellers dominated. Buyers then came back in. Sellers started to accumulate price, range it, right? Sellers and buyers going against each other. Now we're seeing sellers want to come in, right? For me to now want to be a seller, I want to see price give me one candlestick below that range, or below this area. We're testing it right now, so I'm looking to take a sell. And okay, price hasn't given me what I want to see yet, but we're getting there, right? We're getting there. Wicks. I like this downtrend that's forming once again. Price is overall shown us the momentum to the downside, right? There's no such thing as a perfect entry, but there is a great entry. And as of right now, we're seeing, okay, price hasn't sold off just yet. Give it a second. Let's see what happens. Nice. So I'm glad that we stayed patient. That's part of the game. Now we're seeing, all right, price is rejecting from this bottom end. We're coming back up, right? We're getting closer, and beautiful. So now we could see this sell-off. Now, if you wanted to, you can enter. It is a steeper stop loss, right? Looking for about 35 pips typically, because then if price wants to continue moving higher, then we're not interested. And typically, I look for about 30 to 40 pips. Trading that is decent for me. So based off of this momentum, if we know price should move lower, and then we'll see as price ranges, right? So price did pull back, and that's a good thing. Most of the time, you can do two things. You can wait for the break of structure, right, which is right here, meaning you see sellers now dominate, right? Break structure, meaning take out the lower low, continue moving lower, and you can enter on this break of structure or the take of liquidity here, or you can wait for the pullback and then enter, right? Both are great options, and typically, being a safe trader, I like to enter on this retest and then the continuation, but you risk missing the move. All right, so with this being said, at your own discretion, choose whether you want to be a trader who trades the breakout of trend, meaning price was, consolidating, then it broke this lower low, making a new lower low. Take your trade after the candlestick ends, because it still could have been a wick, and then see if price wants to continue to move lower. But you risk that price may pull back and take you out before it moves lower, right? So both are good entries. Typically for this particular example, I'm gonna enter based off of the momentum that has been built here, right? So now we're looking for about 40 pip in this trade. Not too bad. And as we see, price drastically move down. At this point, being that I'm looking for a bit more, I may consider taking something off the table, meaning paying myself. If you use bigger lot size, it's better for you. I do not have access to the biggest lot sizes just yet, but with time, right, we'll be able to take something off the table and it'll be of great success. As of right now, if you take something off the table using one lot, two lot, it won't be much. But with this momentum, I like to see price continue selling, and we'll see how price reacts, right? So now we see that pullback. Now we see, okay, buyers came in, sellers try to push price lower, buyers came back in, and currently we could see a pullback up, right? As we're starting to see that, this may be a good time to close your position. I'm still wanting to see a nice sell-off. Typically, Asian session gives you more than just 40 pips. Right, it's already been moving, right? It's moved about, let's see, it started here. It's moved about, if we go back, 100 pips already. Right, so typically the Asian session likes to give you its move, and then the London session comes in and makes its overall move. Let's just see what price wants to do here, and look at that. We got that overall take profit at about 40 pips. So when I'm looking to enter a trade, I usually go when it is taking out the lower low. In this case, because sellers are dominant, if it was buyers, right, I want to see buyers take out the higher high, and then that's when I'd enter on that break of structure. Basically, price now moved above this, I'd enter when price starts to move above, catch the move up, but you risk, right, price coming back, pulling back, and then moving higher, right? So typically you either want to enter on this break or on the pullback. If you're a safe trader, always enter on this pullback, because price could pull back, take out this low, grab liquidity, and then move higher, right? So it could look something like that. But typically if price is respecting, you won't see that and you won't have to deal with that. This is just a good example of a good entry. Usually it's when it breaks the structure or it gives you a pullback with the break of structure, pullback, fails to move higher in this instant, and then sells off, right? This is just a seller's example, right? Typically in a buy, it'd be very similar, not too different, and very much the same thing, just looking for price to give us the move to the upside, right? So in this case right here, we have price selling off, we have this push up, right? So we go to the 30-minute, we have this push up, price came back down, right? This could be the push up, the pullback, and we could see price want to continue moving higher. Usually I like to look at every time frame, not just one in particular, but every, and you can see that price is ranging, has not wanted to move out of this area, right? So with that being said, you don't like to trade ranges due to the fact that you can get taken out very easily. Price can give you a false move and move towards the other direction, right? Just grabbing your money and doing the complete opposite. So with that being said, typically you want to be patient, see the trend, see what price is doing, look for the trend to continue by breaking that structure, right? So if it continues moving lower, good, let me get a pullback and then enter on that pullback, which would be right here once you see sellers start to come in. Same thing with buys, and just being patient is the name of the game overall.